Welcome to Alpha Wolf Trading. Did you know that there's over 12,000 stocks or companies that trade on the OTC? Between the NASDAQ and the New York Stock Exchange, you have over 7,000 companies. But us as retail investors, we wouldn't know that unless we were researching. Because why? Wall Street focuses on the elite, the big companies. And where the retail investor has their advantage is in small and micro-cap stocks. Why? Because you have the opportunity to speak directly with leadership. That is what this is all about here at Alpha Wolf Trading. We're trying to find the hidden gems, and we interview the executive teams of companies that we think meet the parameters to be those hidden gems. I also want to make sure you understand that this is not a paid-for promotion. I collect no compensation for the interviews I do here. These companies that I interview have been identified as potential opportunities for me and the members of Alpha Wolf Trading to receive a higher than average return on our investment. These companies I have identified either because of a technical setup on a chart, a fundamental change within the organization, new management team, new products, all kinds of different things that actually lead me here. But what do I think is the most important? Leadership. And that is why I do these interviews. I want to understand what drives the person that is leading the charge. I want to feel their passion. I want to understand their vision and the strategy that they're going to use to achieve success. That is what these interviews are for. I want to understand the share structure and the cap table, the size of the TAM, the total addressable market. This is the opportunity to learn all of those things. So sit back and enjoy. And if you learn anything from today's interview, do us a favor. Subscribe to the Alpha Wolf Trading YouTube channel. Hey everybody, Tim from Alpha Wolf Trading coming at you with a follow-up interview to an exciting story with not just one, but two new products. We got Dan Bradr and Tim. Tim, what's your last name? I'm sorry.
Burns.
All right, so we got the CEO and the CFO of Ideal Power here, and you guys are kind of busy a little bit, huh?
Yeah, definitely. Getting our technology commercialized has really been our focus this year. So it's really all been about customer engagement and getting new products launched.
So for those that aren't familiar with what Ideal Power is doing, and it's really changing the entire semiconductor. There's some real innovation here, right?
Definitely.
And there hasn't been real innovation in the space for a while.
Yeah, I mean, our technology, our semiconductor technology is a new architecture, and there hasn't been a new architecture for at least 20 years. They're few and far between. And we're bringing out our technology here, we think at the right time, because if you look at the segments where we make a lot of sense, there are things like electric vehicles and renewable energy and energy storage. And all of those are still really at the very beginning of their growth. So we've got a macro trend of what's happening in these applications, and we're bringing out a technology that makes them all more efficient.
All right, so it's B-TRAN is the technology, right?
Correct. Yes.
You want to give a real quick snapshot of what exactly B-TRAN is?
Sure. B-TRAN is a semiconductor technology that's used for power switching. It's to control the flow of energy in applications like your electric vehicle, your solar installation, batteries, EV charging, motor drives. And the technology itself has a couple of key advantages. One is it's much more efficient than the traditional semiconductor devices that are used, typically IGBTs or the traditional technology. And it's inherently bidirectional. So typically to make a bidirectional switch, which you need to have for anything that uses batteries, because you have to charge and discharge, you do that traditionally with 4 devices. We do it all in one device with about 20% of the losses of the conventional approach. So big impact in terms of the range you can get in an electric vehicle or the amount of kilowatt hours you can get out of your renewable energy installation.
So part of the reason that you can do that is you actually use both sides of the circuit board. Is that?
Yeah, I mean, traditionally when you make semiconductor devices, they're processed on just one side of the wafer. And we have figured out how to process both sides of the wafer and have the features on the front and back aligned to within a couple of microns of one another. And that allows us to really put this architecture into place. So we actually get a lot more functionality out of each wafer that produces the devices for us.
Is that technology or that process proprietary to you?
Yeah, it is. In fact, double-sided wafer processing is just not done very commonly in the semiconductor space. So what we've done is, we've done a lot of patenting around our technology. It covers globally the architecture itself. But the things that we've come through the last couple of years, learning how to make a double-sided wafer, we treat as a trade secret. So if some company in China wants to study our patents, have at it, because you'll have no idea how to make this thing. And it's not an easy thing to figure out.
So I think one of the things that I love about you too is where do you have those? Where do you have your wafers made?
All the work we've been doing here so far has been in the United States.
Yeah, and I kind of like that.
Yeah,
for some reason. Like,
well, you're not going to see this made in China. It's just not something we're going to do.
And I think that's fantastic. So let's talk about the industry. So you've got electrification of vehicles. Obviously, that's a big one.
Yes.
Right?
It's we're actually working with one of the world's top 10 automakers in a program where they're paying us to basically get our technology ready for being used in the drivetrain of their EV platforms. We've finished the first phase of that already. We're in the second phase. We'll be successfully wrapping up the second phase here, hopefully in Q1, and move into the last phase, which is that readiness for volume production from their perspective. So it's EVs, it's EV charging systems, it's solar energy, particularly if it's coupled with energy storage. It's standalone energy storage for businesses and homes that want to actually have battery backups. It's motor drives. It's UPS systems for data centers. Anything that has high power, our technology can apply in a way to actually make them more efficient and get more useful work out of the application.
Yeah, I would say the timing for this is I don't think you can get much better timing. Really.
Sometimes luck plays a role, and we just think we're pretty fortunate that we figured this out just at the right time.
All right, so let's talk about you've shipped everything that you wanted to ship within this time frame, right?
Yeah, we said that we were going to ship all the packaged and tested devices for the program that we were doing with the U.S. Navy for a demonstration of a very large-scale circuit breaker that's based on our semiconductor technology. And we had a bunch of really large companies that were in our test and evaluation program that wanted devices that they could evaluate with their engineering teams for their own applications, and we shipped all of those. So we've got devices in customers' hands, and now we're getting ready to ship the first of our commercial products.
And what I found interesting, or I read, was that through this, you've already gotten a couple of opportunities that you really didn't even recognize as being opportunities, right? Until they
it's funny, as the awareness of the technology has gone up, we've got people that have approached us for things that weren't even on our radar. Very, very large companies that want to use our technology for circuit breakers for the utility industry or for industrial applications. We've got customers that have come to us with a variety of just novel ways to use the technology that just weren't on our radar. And what we're finding is we're working with really some of the cream of the crop of the engineers, because they're typically the folks that are in the customer's engineering team that are the advanced technology guys. I mean, those are the guys that were our PhDs get together with their PhDs and they stimulate each other's ideas on how the technology can be used.
Which is exciting. Right?
It is.
It's like a new frontier almost.
It is. And, I'll use the automakers as an example. The automakers used to rely on the tier one suppliers to bring them new technology. As everybody's kind of shifting to EVs, the traditional automakers have realized they're behind the curve. So they've built engineering teams in-house to literally try and take 2 years out of their typical design cycle. And the engineers that we're working with in these automakers, they are actually some of the best engineers in the company because they've been tasked. You got to figure out a way to do this so we can make EVs that are lower cost and have longer range and don't look like we're copying what Tesla or BYD is doing. We need to come up with something that's novel and differentiated.
Well, speaking of, Tesla, for your product, being that there's nobody else that has anything like it, right? If it creates more efficiencies, I don't care who you are, Tesla, Lucid, whatever, I would think that they would want to take a look at what you've got, right?
Well, the automakers kind of get committed to a path, so it takes time to get in and get to the right people in there. We've got another automaker that we're already starting to work with. We've got a couple of tier one suppliers that want to make sure they're not left out of this EV transition. But Tesla did something that really kind of verified our strategy. Tesla came out maybe a month or two ago and said, we're going to use 75% less silicon carbide semiconductors because they cost too much money. And we're just looking at each other and saying, that's what we've been saying. We make ours in silicon. We can give you a big boost in performance compared to conventional semiconductors without the need to go to these really expensive exotic materials. So I think as the automakers look for how are they going to bring the cost of the EVs down so they can get to mass adoption, and how are they going to improve the range, our technology is going to be on more and more of their radar.
So that the auto market we know is a massive market, but yep. I think the even bigger opportunity, and this is just my view, is if we're going to go to all electric by 2035, we need one hell of an infrastructure put into place.
Oh, you better believe it. We need infrastructure on the EV charging systems themselves, and the utility infrastructure needs to be upgraded because it wasn't meant to supplant all the gas stations that are out there. Our infrastructure at the utility level really is not going to be able to handle all this EV charging distributed throughout the place. So the utilities are going to have to invest in new technologies. So they're going to need things like more efficient circuit breakers at their substations. They're going to need new transformer designs. They're going to need new protection relays, all of which you can use B-TRAN for.
And they're also going to need to have some battery storage.
Yeah. Oh, definitely. It's interesting that people thought the utilities were not going to adopt batteries, but I think most of them pretty quickly figured out batteries, can respond instantaneously. They can put them where they need them in the system, where the weaknesses are. And for the utility, it's great. It's an asset that goes into their portfolio that they get a guaranteed return on. So why wouldn't they adopt batteries? But these things all need protection around them. They need power converters to convert them to AC, and our technology can do that.
Which is what makes where you're at right now. Let me ask you this, both of you. You guys feel like the company is in the best position it's ever been in?
Oh, definitely. Certainly. Yeah. From where we are from a technology standpoint, from customer engagement, from our products and their readiness. And the folks that we're collaborating with on our supply chain so that we've got the sourcing that we need. We're excited. It's unfortunate we're in a difficult market environment, just across the board, but we're in great shape and we're really looking forward to what the next couple of years are going to bring for us.
I look at it like this. Yes, we're in a difficult market environment, but this is when if you do your homework and you're doing your due diligence, this is when you find real opportunity that can change your life, right?
Yeah, for sure.
So this is I would say that I would classify you as a game changer for the industry. Would that be? I know people like to throw that shit around, but this is like a real game changer. Right?
Yeah, a technology with the level of innovation and benefits that we have is, I haven't seen that come along in a long time. And that's part of why we're here. We're excited about the opportunity the technology presents. And as we get more and more companies aware of the technology and what it can do for them, we see that excitement coming back from the engineers on the other side of the table.
So when do you feel as though? Do you feel as though the technology is validated right now? Do you feel as though people have already bought in, or do you feel as though you still have to get to that one, maybe land that one big customer that says, this must be the real deal, right?
I think for a lot of people, engineers are conservative by nature, but I think when we got awarded the second phase of the program for the top 10 automaker, it got people's attention. They're like, oh, this obviously has to work, and they have to be happy with it because they're paying Ideal Power to go do this work. So it looks like it might be the real deal here. And I think, just seeing the folks that came in to work with us on circuit breakers, very large global companies, the validation for them was the Navy project was successful. We shipped them hundreds of working tested devices. That was kind of validation for them. So each segment kind of does it their own way. But the things that we're doing on the customer engagement, when we take a step forward in a program or we complete a program, it brings another group in to say, okay, you've passed another step that says this is legit. Yeah.
How are the margins on the products that you're selling? I mean, how are the margins? I mean, you don't have any competition really, right?
Well, so we are still competing against the conventional technologies, and I guess in some instances silicon carbide MOSFETs. But we're looking at volume and scale margins of 40 to 50% in terms of gross margins. The other opportunity we have is particularly if it's customer driven, particularly on the automotive side, is we would be willing to provide a manufacturing license to another semiconductor company to actually manufacture the B-TRAN devices on behalf of that automaker. So that would be something that would be accretive in terms of, basically 100% gross margin.
That wouldn't suck.
No, it wouldn't. And the big automakers, because they have been through supply chain disruptions, they're going to want to have a second source. And it's, if we can do that with a world-class semiconductor company that's already got the front end of the business built, they've already got the ability to make devices, it would actually be a good fit for us. That's money we don't have to spend building out more on our sales team and more on our operations side of the business.
So where you're at right now with your two commercial products that you're rolling out, right? Mm-hmm. So there's this, I guess, the time frame of going through testing and pilot programs and all of that, right?
Yep.
And on average, how long do these programs last? I guess what the question I would have is, when do you get to the point where, you're shipping product and you're bringing in the dough, right? I mean, when does that start to really happen?
Yeah, I think what paces it is getting through the OEM company's design cycle. So for the industrial applications like the circuit breakers or power converters for renewable energy, that takes about a year. So you would start to see sales, going to those folks in the second half of next year as they get that design cycle and start shipping their own products that incorporate B-TRAN. The automakers will take a little longer. The top 10 automaker that we're already in a program with, the objective is production ready by 2025, which means we're already starting to ship them devices because they've got a long cycle in terms of builds and making subsystems and everything else. So, I think you're going to start to see the revenue ramp for us starting next year and then really growing pretty quickly through 2025.
So starting about midpoint next year?
Yeah, midpoint next year, we should start to see product shipments starting to actually look more than a few here and there that start to be orders that are targeted for OEM products.
I mean, I'm a little surprised that, and maybe as you get further down the road with this stuff, I mean, I have to imagine that there's somebody out there that's taking a hard look at you guys as a potential takeout candidate, right?
Well, the semiconductor space, it's accretive. There's no doubt about that. But it's one that you got to be big enough and you got to have enough customer revenue that they don't look at it and say, all right, I'll buy it, but I got to get 2 more years of investment into it before it's really adding to my top line. Right. But I ran into a gentleman who is at a very, very, very large company at a technical conference. This was 2 years ago at a semiconductor conference, and I introduced myself, and he said, "Oh, you're the B-TRAN guys." So I mean, we haven't even figured out how to make the thing yet, and he already knew who we were because we're filing lots of patents. And his comment was, that's a really cool technology if you can figure out how to make it. So well, we figured out how to make it. Yeah.
So I mean, I just have to believe that somebody's got to be taking a hard look at it. Yeah, I mean, whether they do anything or not, I don't know, but I would say that there's always that option. I would never buy a company on the hopes that it was going to get taken out. Actually, I hate the fact that some companies to get taken out too damn early, right? I mean,
Well, I'm kind of hoping I'm kind of hoping we're not even on their radar, because we'd like to get a lot bigger before that comes along.
Well, I'm glad you're saying that, Dan, because that's the way it should be. Wait until it gets to scale.
If we got taken out anywhere even remotely near where we are, you'd find me on the top of the roof ready to jump, because it's like that's not why we've put in all these years of effort to go figure this stuff out, to get taken off with a zero left off what it should be,
All right, so let's talk about, Tim, where you are from a balance sheet standpoint, right? So if we're talking, you're not going to start seeing revenue until mid next year. How are you sitting on cash? How's the debt level? There is no debt, right?
Correct. Yeah. So debt free. In terms of cash, I mean, our burn this year will be sub 8 million. We had last reporting almost 13 million on the balance sheet, so we have plenty of cash through next year. So we have no immediate plans to raise capital. It's not on our radar right now. We're really focused on continuing execution, getting some more announcements out there, some more news out there, and hopefully driving up the stock price. But from a balance sheet perspective, it's a clean balance sheet with, particularly in this market, we're in a good position where we have enough cash to get us through next year.
And I think that's important to highlight, because that is what people are concerned about with the small micro cap companies, right? Is that in this environment, because the capital markets are just, garbage right now, right? And if you need to raise capital, you're not going to get a friendly deal, right? So
no. I mean, they're gonna be structured deals. They're gonna have a ton of warrants on them, and you're going to be limited in how much you're going to be able to raise, because if you look at it's small cap companies across the board, values have really been depressed here, really starting since August. So I think there's a limitation even how much cash you could raise.
Right. So it's important to highlight you guys are not in need of raising capital, right? I mean,
we're not.
I don't know how long this terrible market we're going to continue to endure, but I know that we've been going through it for about 29 months, which is a long time, right?
It is. Yep.
In my head, I really believe that people are underestimating the animal spirits, and they're underestimating all the good things that are happening, right? I mean, these are technologies that are going to change industries, make them more efficient, right?
Yeah.
And it's not going to go away. The infrastructure that we need in place the need for that is not going away, right? It's only going to get intensified.
Right. And you're seeing, if you think about the automakers, there's several of them have already come out and already said at what date they're going to stop making combustion vehicles. I mean, they're planning the exit from the traditional automobiles. So you're going to get to the point where, there's going to be some brands, there's not even a combustion vehicle for you to buy. It's going to be all EVs. So I think we've kind of reached and probably past that tipping point for the industry. And if you look at things like solar and energy storage, they finally gotten to the point where they actually make economic sense for most of locations around, certainly around the U.S. and a lot of places around the world, where people are realizing, hey, wait a minute, I can save energy for my business or for my home, and the payback looks pretty good. So, I think renewables and electric vehicles and the infrastructure to support all that stuff is inevitable at this point in time.
Right. And the infrastructure is the thing that I just keep looking at as like this massive undertaking. I mean, we're talking about the entire country, right? We have to have basically what we built over how many years? I mean, I still see gas stations going up all the time, right?
Yeah.
So think about how many years we've been putting up gas stations, and we still need more gas stations, right?
Yep.
So what does that mean? We better get busy on these electric charging stations. What's
going to be interesting is for the electric vehicle charging stations, it's going to also be a function of where can I connect to the grid? There's enough power available. And then there's another whole dynamic that comes into play in the EV charging stations, just like at your home or your business. Well, the business model is not that straightforward, because if somebody pulls up, they've stopped at the grocery store on their way home from work. Well, they're charging their vehicle at the peak hours of the day from the utility standpoint, the highest price versus somebody that's going to come by at 9 o'clock at night and charge it. So somebody's got to go figure out that as well. That may mean putting buffer batteries with the EV charging stations, different business models. There's a lot of work that needs to catch up to where, the actual adoption of the vehicles is heading.
Which I think is all good news for you guys.
Yeah.
Right? I mean, it's all good news for you guys. It's like the sweetheart spot.
Yep.
And maybe people haven't put the pieces together yet, and I don't know why. It's pretty self-evident to me, right? So we're comfortable with where the balance sheet is. We're comfortable with the order flow or the interest that's coming in, the pilot programs that you have going on. You've shipped out everything you wanted to ship out.
Yep.
What keeps you up at night, Dan or Tim? Either one of you.
For me, it's mostly, we saw what happened in the Middle East here just all of a sudden. It's all these events that cause the markets pause, that cause people to think about, well, how does this affect my business? Are these issues going to get broader? People are worried about China and Taiwan. I mean, so it's more all the global turmoil that's going on that's affecting people's investment. Yeah.
Right?
Correct.
I mean, all that we can't control.
Yeah.
But if you look at throughout history, we've been through a lot of wars. We've been through a lot of different challenges throughout history.
Yeah.
Stock market has always found a way to go up.
Innovation
doesn't die.
Yep. Right.
We just continue to innovate, and then we find a way to work around all the other bullshit that's going on.
Yeah.
World. I mean, that's just the reality of it, right?
Yeah. And that's why our approach has been, we started the year, we kind of laid out, here's all our milestones that we're going to accomplish for the year. Just track our progress. We hit every one of them. So our approach is, look, we can't control this other stuff. So let's just keep our head down and execute. The rest of it is just a distraction. It's up to us, our team and our management and our board to really just stay focused on just delivering what we got to deliver.
Are you guys considered an ESG play?
So yes, in general. So it's interesting. So when companies look at us, it's usually, or when investment banks, for instance, it's usually on the research side, either clean tech or semiconductor. So we're commonly grouped into either one of those. And in some, they even have internal debates. So it's, there's a lot of them have placed us in that clean tech category, which goes into ESG. And it's an efficiency play, right? If you can make electrification more efficient, by definition, you fall into that ESG category.
Right. At least from the environmental side, right?
Yeah, correct.
Yeah. And I think that's big. I mean, there's a lot of funds out there that are specifically looking just for ESG, right?
There are. And, if you think about a lot of the companies that are out there that are in the renewable space or that are in the EV space, they're really, really big companies. So it's hard to find the pure plays like us who can play in multiple spaces there, but it's not one of many things that we do. You look at a Siemens, for example. Well, Siemens is involved in solar energy. They're involved in utility circuit breakers and, things that are part of many other things that they do versus us. Every space we play in is ESG related. It's more efficient UPS systems for data centers. It's electric vehicles. It's more efficient EV charging. It's renewable energy. So we actually are playing in all the right segments here and bringing the same technology basically to all of them.
And your product is good everywhere, internationally, here. I mean, it's not just a U.S. story, right?
No, it's interesting because not only is it good anywhere in the world, but when some of the companies approach us about doing circuit breakers using our technology, they said, hey, I know that the circuit breaker, this big circuit breaker that was done for the Navy was direct current, but we need to do alternating current for the U.S. utilities. And we just looked at it and said, it's exactly the same device from us.
So there's a fairly decent sized opportunity here for you guys, right?
There is, the conventional semiconductor high power space is a multi-billion-dollar market. It's I think 11 billion is what it's projected to be by 2026. And the two biggest segments of that are already EVs and renewables. So, I think there's a lot of growth coming in the whole space. And I think we can bring out something that really helps those businesses make a better product.
Right. But big differentiator.
Yes.
Right.
Yep. Yep.
Not a Me Too product. There's a big differentiation here. And
There
there are
is.
real tangible, what do I want to say, benefits to using your product.
Yeah, definitely. Definitely. So a lot of it is just getting them aware of it, getting their technical community to understand it, get them up to speed because, new semiconductor technology doesn't come along very often. So a lot of it's just that educational process. And then having them be able to see companies in their market space doing something with our technology, because it's a lot of times engineers don't want to be the first to do something. But if another big company in their space it's like, oh, we better start taking a look at that.
So if somebody's watching this, they want, they're thinking they might have an application. How do they go about making something happen with you guys?
They can actually contact us through the website. There is an opportunity to participate in our technology evaluation program. There's a lead that comes straight into our business development folks, and our guys are really quick at jumping on it and starting the conversation.
Okay, excellent. This is a great update. I mean, is there anything that you guys feel as though I missed?
I don't think so. I mean, Tim, you know us really well, and you've done your homework, so you usually cover all the high points. So that's why I always enjoy having a discussion with you. It's a pretty high quality discussion.
Well, the way I view it is, look, when does it start to matter to investors? When they start to see the revenue, right?
Yeah.
I mean, that's really when it's going to resonate. But between now and then, I would think, and this is just me sharing my views, if you want to wait till the revenue starts to hit, I think you're going to be a little late to the party for the stock.
Yeah.
Because typically, what the stock should do in a normal market is move in advance of the revenues hitting, right?
Correct.
But if you start announcing these contracts where it's been decided you're going to be in whatever product, start doing the math on how many of those products get sold a year, right?
And we're a small company. We're news driven. So when we start to announce who some of those customer names are and getting orders from them or achieving acceptance for their designs or whatever else, the stock will should move a lot based on that before the revenue even shows up.
I'm going to have to move your logo out of the way, actually, and then I want to take a look at the chart just so people can have a little understanding from a technical standpoint what we're looking at. But I think the chart looks very compelling because it's actually been kind of in a like a pie formation pattern for quite a while, right? Let's see, we've got 1, 2, 3, about 3 years, right? Mm-hmm. And it's just coiling up, right? Yep. You can see it going the wedge, right? That's pretty. Yep. Anybody can see that. So what's going to wind up happening is you're just going to continue to tighten up, and then eventually, like a coiled spring, you're gonna pop one way or the other, right? Yep. If you look at the timeline fundamentally of what you've got going on, to me, the logical place that it would break is to the upside, right? Mm-hmm. Yeah. And once you break a long-term trend like that one, that's a very powerful turn, right? It's like indicating that momentum has been stopped in one direction and there's something powerful enough to push it in another direction, right? Yeah. And that could be the beginning of a new long-term trend, which would be really fun to catch when it breaks, right? Yep. Agree. So you can wait and try and find the absolute bottom, which nobody is ever really good at doing, or you can start dipping your toe and building your position today. Yeah. I'm not telling anybody to buy the stock. That's not what I do. I'm just presenting the story. This is a game changer story of an industry that is really just getting started. And there is going to be a tremendous amount of your product, I think, needed for a lot of big projects that are going to happen, right? Yeah, not if happen, they're going to happen. If we're going to do electrification across the U.S., there are some massive projects that are coming, right?
That's for sure.
And you guys are positioned well to be a big part of that. So, do your own due diligence. You have a IR, you can go to the website, sign up for email alerts, right? Anytime you guys have a press release, start paying attention to the story is what I would recommend, and maybe dip your toe into the stock at these levels. To me, what's your downside, right?
Yeah.
Me, I think there's a heck of a lot more upside than there is. You think well, I'm not going to ask that question because I know the answer. And you probably can't answer it anyway because of the SEC or some other BS like that. So I'm not going to ask. But guys, what do you think the next catalyst will be?
I think next catalyst will probably be us successfully completing phase 2 with the top 10 automaker and getting into phase 3. I'm hoping that we'll be able to name them at that point. Don't know, but we're certainly going to try. And then just first commercial shipments for a product as they start to go out. We'll probably put an announcement out around that.
All right. So when do we want to do a follow-up?
We got the holidays coming up, so probably early Q1. Yeah.
Early Q1?
Yeah.
Okay. Let's do it then. All right.
Sounds good.
Thank you for taking the time, guys. Appreciate it. And that's it. I'm going to turn this off. Hold on one second.
Okay.
Oh, IPWR. That is the symbol. Okay. IPWR. Ideal Power. All right. Thank you for tuning in to another CEO and CFO interview here at Alpha Wolf Trading. Today we had Dan Bradr, CEO, and Tim Burns, CFO of Ideal Power, ticker symbol IPWR. I hope you enjoyed today's interview, and if you did, do us a favor, give us a like. How about giving us a share, and while you're at it, why not give us a follow? Until next time, stay safe. Alpha Wolf Trading wishes you the very best of success.